It's a practice-based revision session. So on the basis of past papers, I will discuss the relevant area first, and then I'll discuss the question. And also we'll discuss the examination techniques, how to attempt section A type question, how to attempt section B type question, and also we'll practice on the computer-based system, that is how to use the Word document and how to use the Excel document for the calculation purpose. So first of all, today's session is about the corporation tax, and the focus will be on the area which is very important for exam, and that is related with tax losses. Remember that losses are very important topic for any exam attempt, whether it's individual losses or corporation losses. But as far as corporation is concerned, the group loss relief is always an important issue. We might face something from the group loss relief. So you should know how to deal with the individual companies' losses and how the group loss reliefs rules are there. The drawback for the student is that the syllabus is very huge and you have to produce the tax knowledge as well as the calculation. So first of all, in the remaining time period, you have to focus on tax rules, try to memorize tax rules so that you can produce when examiner asks, explain something, discuss something like that. And second thing is that you know how to apply the application of rules. And remember that the theoretical stuff is easy to gain the marks. So the more you memorize, the more you revise your tax rules, that would be beneficial for you to get good marks, right? Our paper is comprises of two sections, section A and section B. Section B is worth 40 marks. So it is always advisable to use section B well and try to get as many marks as possible from section B. Why? Because section B is easy to handle as compared to section A. In section A, we have 60 marks, and in each section, we have two questions, right? Question number 1, that is very lengthy, that is worth 35 marks. Question number 2, that is worth 25 marks. So question number 1 is always a difficult one to handle because it requires a lot of information, plus the presentation must be very good because you have to score 4 professional marks in question number 1. And there will be few ethics marks in section A as well. But as far as section B is concerned, question number 3 and question number 4 worth 20 marks. So in terms of the information, it is very easy to handle section number B, section B, question number 3 and question number 4. And there will be always few issues in section B type of question, and there are many issues in section A type question. So the first advice from my side for the student is always start your paper from section B and try to attempt the easy marks in question number 3 first and 4. If there are few part question, you know well, you know the theoretical stuff, just attempt easy marks from question number 3, as well as some easy marks from question number 4. And then you can jump onto question number 2 and 1 accordingly. Time management is very crucial in paper, and very few students are able to complete that exam in the required time given. So be selective in writing. Do not write X's, only write those that have been asked in the question, and be specific to the question requirement. You don't need to calculate if not needed. You don't need to explain something which has not been asked in the exam. So at least your aim should be to attempt at least 90 marks on the safe side. The best practice is to attempt the 100% paper, but at least 90 marks should be the target one. And it all depends if you are able to quickly attempt the section B. If you're wasting time in section B, if you're working on some difficult rules, just try to work out on the easy marks first, and then at the end, whatever time is available, you can opt the other points. Okay. So we are starting from the section, the topic that is corporation. So let me first give you something in brief about the corporation losses. So let's talk about the trading losses first. That what options are available. Normally the question or the examiner usually asks in a particular situation that how many options are available for a particular company. And then you have to either calculate the tax savings, or you have to calculate the tax liability after offsetting loss. So the rules must be clear so that at least you can get the theoretical marks. If you are, if you're feeling any problem in calculation, but at least theoretical marks are easy to calculate. So let's move to the, first of all, let me just go through the losses treatment first, and then we'll apply our knowledge into a particular exam question. Remember that for a company, except for first year and last year, the tax year is always of 12 months. I hope you know that particular rule. A tax year can never be more than 12 months, right? If there is a tax year which is more than 12 months, what you have to do? You have to split your period into two parts. First 12 months and the remaining period. So there is a likelihood that you can get a question on a short period of account. And remember that if a period of account is short, the consequences you have to remember that the capital allowances might be different and there might be some impact on losses as well. Okay. So what options we have? So we have different options available, and you have to plan in such a way that what option is suitable for the business and how it is different from the individual business like sole trader and partnership. So we have, first of all, the option number 1, that is carry forward relief. Option number 2, we can offset our losses against current year income. Option number 3, we can use carry back method, but for carry back method, it is mandatory to use the current year first and then use the carry back. Remember, in individual trading losses, the sole trader or partnership, there is no such condition that you have to offset with the current year first and then you can use the carry back method. It is only in the company's case. And then in case of cessation of business, that is the last year of business, you can get a special treatment, that is a terminal loss relief. So it means there are 4 options available. One is carry forward, other is current year, third one is carry back method, And fourth one is a specific terminal loss relief. You can ask any question in the chat box, and if you want me to do anything to discuss any particular issue which you feel is a difficult one, if you want any advice, you can just write on the chat box, and then I will consider that as well. My focus will be on those areas which are important and which student finds very difficult. So I will discuss those past paper questions having such kind of information, so that because the easy marks you can always attempt, the easy areas you can always attempt, like capital allowances. Capital allowances is very easy to attempt, right? But as far as the group losses, the group relief, the gain group, these are very difficult to attempt. So focus will be on to practice such questions, right? So in case of the carry forward method, remember one thing, that there are differences in individual and company. So in case of the carry forward, we'll use the carry forward method in such a way that you can offset against total profit, right? You can offset against total profit before QCD. Similarly, in the case of current period loss, in case of carry forward, there is no limit. You can offset for any time period, but in case of others, there might be some restriction. So in case of current period relief, one of the restriction is a partial claim is not allowed. So it means the whole loss can be offset. And if you're not able to offset, you have other options available. Similarly, if you want to opt for carryback method, there is a restriction that you can only offset against total profit before QCD, that is the last 12 months. Okay. And that last 12 months, if the previous period is a short one, then the order will be based on last in, first out. Now, as far as terminal loss, the fourth one is concerned, the carryback method is to be used. The period is now 36 months rather than 12 months. Okay. And the order will remain the same, that is 36 months. So these are the four methods through which you can offset the trading losses. Now, as far as the other losses are concerned, we have property losses, we have non-trade relationship deficit, we have management expenses. So you should know all these. As far as capital losses are concerned, we have to offset the current year losses with current year gain. You cannot offset capital losses with other income. Okay. So after offsetting the current year loss with current year gain, any further loss is to be carry forward against the gain, not against the total profit. One difference between the individual chargeable gain and the corporate chargeable gain, that is the capital gain, is that there is just one pro forma. And the tax rate for the corporation for CGT is 19%. Similarly, there is no annual exemption available in case of chargeable gain. But for individual, annual exemption is also available, and individual income tax pro forma and capital gain tax pro forma is different, right? And also know that in case of company, there are few differences in capital gain tax as compared to the normal individual treatment. Now let's move to our first question, which is based on capital losses. Just a minute, let me share the question. In the next session. I'll use the computer-based platform as well, not using today. And I will give you in advance the topic that I am about to discuss in the next session. Plus, I will also tell you the key questions that you have to practice for this particular exam. So this is our first question of this session based on few areas. It's a kind of the section B type, section A question number 2 type question. So lots of information. Students usually find it difficult to extract the right information and also to write the relevant points. So it's very important to have a good understanding of the question requirement. Let's focus on the requirement and try to learn how I am able to attempt any question. Okay. So see, the first requirement says that use of the trading loss of Janus PLC. It means we are dealing with the company's trading losses. Previously, I told you in my slide that how many, okay, now you can see that. Are you able to see the question now? So just see how I am attempting this question. I'm not discussing, I'm not reading the question. I'm just focusing on the requirement first so that I have an idea that what has been asked. So first part says that use of the trading loss of the company. So it means the company's trading loss issue. Explain. Now remember, words, keywords are very important. So it's about explanation, right? And the second thing is about advice. So it's not 100% calculation based question. So first part says that explain the alternate ways in which the loss can be relieved. Which loss? Trading loss. On the assumptions that it is not to be carried forward. It means if you are explaining carry forward, you will not get any marks, just wastage of time. So other than carry forward, you can use. And remember, case specific. Because if it is not the cessation case, then it's useless to discuss the terminal loss option available, right? So few marks are available for the explanation of alternate ways available to offset your trading losses. The second thing is advise how the loss should be relieved in order to minimize the loss remaining to be carried forward. What it means? In order, there is a condition, in order to minimize the loss remaining to be carried forward. Now remember that sometimes you have to offset your loss as early as possible. It means you can offset on current year as well as carry back. And sometimes you have to use the most beneficial way. So then you have to think about your donations, other stuffs, that which year is most beneficial for you. But in this part of the question, you have given the task that you should minimize the remaining loss for the forward purpose. And then you should include a summary showing the amount of loss unrelieved. Means you have to calculate, you have to show the memorandum that how you have offsetted the loss and the remaining loss to be carry forward. Now the worth marks is 8 marks. And it's mainly theoretical question. So which document you will use in the exam? In the computer-based exam, if the question is entirely based on theory, then word processing document should be used. And if there is minimum calculation, then you can do it on the word processing document, or you can connect it with Excel by writing that the calculation is in Excel sheet. Okay. So first part we have to deal with losses. let's explore the question with the perspective of trading losses. Your manager has had a meeting with Mrs. Pierce, the group finance director of the company, that is group of companies. So we have one idea that this is basically a group structure. And remember that in a group structure, always remember that there is a chance of a 75% loss relief group. Now, first of all, what are the conditions? What are the restrictions of a 75% loss relief group? Let me just complete the question, then I will discuss the specific rule first about how to create a group and what are the conditions of a 75% loss relief group. With a group loss relief group, there is very much flexibility that either you can use losses with yourself or you can offset losses of any group companies which are part of 75% loss relief group. So we have a memorandum and that says that there are so many issues. First of all, the group of companies. The group structure indicating the trading loss of Janus PLC and the taxable total profit of other group companies for the year end March 2021 is set out below. All of the companies are UK resident trading company. Now, this is important information. You can offset your losses with UK resident companies, right? Now, we need further information, something more from the group's perspective. So, the company purchased SAB Limited together with its subsidiary Voila Limited on 1st December 2020, right? Date is very important. So let me highlight the date. It's 1st December 2020. From Mr. Twin has never owned any other companies. There have not been any other changes to the group structure in the recent years. So basically, this is the information given that we have 100% subsidiary, which is SAB Limited, and the subsidiary has a subsidiary, which is our sub-subsidiary, and that is 100% owned company having profit of 86,000. The minority holding in Castor Limited, where is Castor Limited, and Pollux Limited are owned by UK resident individuals. The minority holding in Dute Limited is owned by PLC, a UK resident company, such that Dute Limited is a consortium company. So one information is consortium company. Okay. So if you can see the group structure, Janus PLC has 55% shares in Dute Limited, 70% shares in Castor Limited, and Castor Limited has 80% shares in this one. So for a group loss relief, 75% direct or 75% indirect holding is needed. So when you have a group structure, you might have some 75% companies and you might have some consortium relationship. So the difference should be clear that how losses can be offset in a group structure and in a non-group structure. The group's policy is for an amount equal to the corporation tax saved to be paid for any losses transferred between group companies. Each of the company is also registered for the purpose of value added tax. Now, one thing is very important. The examiner might ask you in the group setting, that is a VAT group. So you should remember these three things. Number one, a loss group. Number two, a VAT group. And number three, a gain group. All the conditions you must know. These are important areas, right? So Janus PLC's trading loss is 3,30,000, and we have to explain the alternate ways in which the loss can be relieved, and then we have to offset. So we know that we have a group structure. Additional information. The company made a chargeable gain of 44,500 in the same year. The company had taxable total profit in the year ended last year of 95,000 and did not make any charitable donations in the year. So we have current year income available. We have carryback income available. How many options you can write for the time being? By discussing or by having this information, can you identify? Can anyone identify how many options are available? Remember that you don't need to write each possible option available. Be in your limit. Try to read the question, try to read the requirement. Do not write unnecessary things because you will not get any marks for that. So the question says that do not consider carry forward. So other than carry forward, we have options available. Option number 1, we have current year, we have gain in current year, and option number 2, we have carry back option available, right? And also we have the group loss relief. Okay, so current year we have carry back and we have group loss relief because we have available one group structure, right? So I'm about to write, but before writing this part of the question, let me give you an idea that one thing you have to consider is that if in a group structure, if a company is joining or if a company is leaving, so that creates a problem in terms of the corresponding year, right? The corresponding period. So you have to time a portion that how much loss you have to offset. So in this background, two things are very important for group loss relief. One is you must know the rule for the surrendering company, which is a surrendering company in this scenario, and the claimant company. How much surrendering company can transfer losses? First of all, this rule must be clear. How much claimant can claim? This rule must be very clear. Okay. So in our case, the surrendering company is Janus PLC. And in our case, the 75% group, you can check which company is part of this 75% group. We have to see the direct 75% shares or involvement and indirect shares. Okay. So we have to explain, right? Okay, let me write the answer that what options are available. Once again, let me check the question. Explain the alternate ways in which the loss can be relieved on the assumption that it is not to be carried forward. So this is my first answer. You can put heading alternate loss relief. Your presentation must be very clear. First of all, first option. And first option is utilize against own profit. Now you have to explain now how you can utilize in the given scenario. Okay. So you can write it like company can use trading losses against chargeable gain. This is current year in 31st March 2021. This is basically the current year. The remaining losses can be offset with last year profit. That is 31st March 2020. This is the first application. We can also write the amount. Very good to write the amount against the chargeable gain. Chargeable gain is 44,500. Given in the question, let me check. In the question, it has been given that we have chargeable gain of 44,500. We have taxable total profit of 95,000. So you can also refer that we can offset against 95,000. Now look, we have 3,30,000 of loss. So this particular current year income and the previous carryback income is not enough to offset my entire losses. But here I have to write the options available. So second is a 75% loss relief group. Why I'm not using the carry forward option? It is available for the business, but I'm not using. It has been mentioned that do not discuss the carry forward option. That's why. So Janus PLC is having a loss, right? So Janus PLC and what other companies we have? SAB Limited, and its subsidiary which is Voila Limited is having a 75% group loss group, relief group. So what we can do, so Janus PLC can surrender losses to any of the group company. This is first option, right? Why we have a 75% group loss relief? You can write because we have effective interest of 75% direct as well as indirect, right? Now, losses can be offset as per the corresponding period. Now, in the question, it has been mentioned that the subsidiary have been acquired on 1st December, right? The subsidiary has been acquired on 1st December 2020. It means December, Jan, Feb, March, only 4 months. So only 4 months are available. Look, I am writing each relevant point here. So we have to offset with the 4-month corresponding period. right? And no calculation is needed here because we have to calculate in the next part. This is the second option available. Now, in case of the other group structure, we might have some consortium available. So let's see. What is the structure? So it has been mentioned that the Dute Limited is a consortium company. Now, the difference between the group loss structure and the consortium is that we have to use the percentages, right? So in Dute Limited, which is a consortium company, so we have an option available to offset loss against Dute Limited as well. So the third is against the consortium company. This is the third option, okay? Losses can be offset with Dute Limited as it's a consortium company. Why? Why it's a consortium company? So we have less than 75% shares and more than 5% shares. Okay. So you can explain also why it's a consortium company, or although it has been written. So if you don't write, then at least it has been written in the question that it's a consortium company. But how much loss can be offset? So the losses can be offset up to the percentage. This is a difference that you can offset this much of loss only, which is 1,10,000. Now this is the complete explanation. The question was, explain the alternate ways in which the loss can be relieved on the assumption that no carry forward option we have to use. And the scenario was related with a group structure along with a consortium company. We cannot offset with the other companies because not part of the group, not part of the consortium. So that's why, first of all, I have written my own company option available. Then I have used 75% loss relief, and then I've used the consortium company. If you use these three options available, then you can get maximum marks. Otherwise, there will be deductions against what you have missed. Is that fine? Now, in the next part, we have to use the amount. Okay. Maximization of loss utilized. So let's use the option available, how to maximize the loss we can utilize. So next heading is maximum utilization of loss. Follow the instruction of the examiner that says that show the summary of amount of loss unrelieved. Okay, then first of all, how much losses we have? We have 3,30,000 loss available, right? And what we have discussed, how you can offset. So offset against the same company. First of all, in the current year, against the chargeable gain. And how much is the chargeable gain? That is 44,500. And then in the same company, using the carryback option available, and the carryback option was against the total profit, that is 95,000. first two options. Okay, then we can offset in group, and the group first company is, we have, remember the corresponding period. So the SAB Limited is having a profit of 37,000, right? And this is basically a 12-month period. So we have to use only December, Jan, Feb, and March. That is 4-month corresponding period. So it's 37,000 into 4 by 12. And that would be 12,333. And in the next group company, the same corresponding period. Okay. So you can see the same 86,000 of profit into 4 by 12. And that will give you 28,667. There are further loss left. So in the next option is against the consortium company. And the consortium company, you have just one, and that is Duke Limited. And profit is 2,20,000. And remember, we have to use the percentage holding. This is the difference between group structure and the consortium company. That percentage can be utilized only. And that is 1,10,000 of loss. So can you calculate how much unrelieved loss that need to be carried forward? This is summary of my method. So accordingly, I have 39,500 of losses left to be utilized as carry forward. Now look, I have covered the entire A part, the explanation, the calculation, the summary amount, and total marks are 8. Okay. Any question on this solution, this working, anything you want to ask? B part 1 is related with chargeable gain calculation. We are not doing this right now. The second is the issue related with VAT. And third is related with corporation, and that is the sale of the intangible asset. This is relevant within the corporation, intangible asset. So it means 11 marks are available for corporation discussion, and VAT, few marks for VAT, and few marks for CGT. So let's discuss the intangible asset part as well in this question. Castor Limited is to sell patent rights to an unrelated company on 1st September 2021 for 41,000. The company acquired these rights for use in its trade on 1st September 2017 for 45,000. So cost is 45,000 and the disposal proceed is 41,000. The rights are being written off in the accounts on a straight line basis over a 10-year period. Now, in this particular topic, that is the intangible assets other than goodwill, there is a point that how you want to get relief against that. So as it's an intangible asset, so one of the treatment is follow the accounting treatment. Okay, because amortization of intangible asset is an allowable expense. But you can also use the alternate way, and that is 4% straight line value. Now you have to evaluate which one is better than that. Okay. So in our example, we have to find depreciation, right? We have to find amortization. And 10 years life means, 10 years life means the normal straight line is more than the alternate way. So we'll use the same, right? So the question was, explain with calculation the corporate tax implication of the sale of the right. So it's sale of patent. Now, few lines for explanation, and then I will solve the calculation. It's an intangible asset, first of all. So amortization is an allowable expense. Accounting method is also allowable, as well as alternate method. So using a straight line method, amortization is 10% because the life is 10%. Now, let's calculate the sale proceed. So what is my sale proceed? My sale proceed is 41,000. Amortization, for how many years I have to use amortization? Check the period. The purchase date is, no, I'm just asking about the years that has been passed. So the purchase date is 1st September 2017 and the disposal year is 2021. So it means I have to calculate 4 years, right? I have to use the 4 years on 10% basis. So total amortization, I have 4 years amortization. So what is my cost? Cost is 45,000. 10% is the rate. 4 years is my total amortization. So my total amortization is 18,000. So the carrying amount or the written down value is now, so I have to use the written down value. So written down value is now 45,000 is the cost, 18,000 is the total amortization. How much is the written down value? It's 27,000. Now compare this with sale proceed. So the profit is, sale proceed is 41,000. Depreciation total amortization is 27,000. So we have a profit of sale 14,000. And this profit is to be treated as trading income. Look, explanation, I have written explanation, and as well as where I need calculation, I've also applied the calculation. You can use a different format like sales minus the cost minus amortization. Any reasonable format of calculation is good. Fine. So is that both parts clear? Now let's move to some rules of group structure. We have just applied the group structure knowledge, but let me just refresh your knowledge. Just a recap. Why I have used the 10% rather than 4%? Because the beneficial is here 10%. That's why I use the straight line method. Now see the rules of 75% loss relief group. The 51% loss, 51% group for VAT purpose, for the identification of the large company and small company as well. So first of all, see the definition. Let's have a proper definition, because you have to write the proper definition of a 75% group. So can you see my slide of the definition of a 75% group? Okay, see, one company is the 75% subsidiary of another, or both companies are 75% subsidiary of a third company. The holding condition is that own at least 75% of capital, 75% of net assets share on winding up, 75% of profit distribution. These three definitions can be applied. In order to be a part, in order to have a sub-subsidiary, the effective interest we have to count, not the direct percentage, rather the effective 75% is needed. Now this is important because for gain group, there is something difference, 75%. Now, any member company may surrender its loss to any other member of the company. Holding company may transfer, subsidiary may transfer to holding company, subsidiary can transfer to a fellow subsidiary, anything can be possible. Okay. Surrendering company is transferring the losses. The claimant company is the company for which loss can be claimed. Now, this is a rule for surrendering company, how much surrender company can transfer. Okay. You can check from your notes or other thing that. And there is something like degrouping charge as well. So if a company is having a gain group, then we have to apply this degroup or something like that. Now let's focus on further areas. Let's have another question. Meanwhile, you can ask any question. Now let's have some discussion on 75% gain group along with the some chargeable gain stuff, some rollover relief. It's also part of the group structure. So the next question, next targeted question is based on some group stuff with respect to the chargeable gain, reliefs, rollover relief, capital allowances, Again, we have a group structure, but before moving on to the question, let's see the requirement first. The A part, A1 says that calculate the chargeable gain on the sale of building 1, ignoring any potential claim for rollover relief. Now you should remember that when rollover relief has been claimed for an individual as well as for corporation, this particular rollover relief is the only kind of relief which is available, which is common for individual as well as for corporation. Other than that, no other stuff we usually use. Now the condition is that you must remember that for rollover, the qualifying asset condition, you should remember that which item are part of qualifying asset. And there is also one condition, that qualifying period of time. Because if examiner asks about the explanation side, then we have to write. But in the first part is only calculation. No explanation is needed, right? Remember, dates are also important, because for 1 mark or 2 mark, the examiner might ask about the dates, the penalties, the reliefs, the personal allowances, and anything. Even a minor issue can be asked, like income tax calculation, the personal allowance calculation, the reduction in personal allowance, the transfer of personal allowance. Now, A part is related with the chargeable gain, the rollover relief. Okay, so let's focus on A part first. And as it's a question of the company, so you can see here we have been given indexation allowance factors. And you might remember that the indexation is only applicable till December 2017, right? So we have to find out the relevant indexation allowance. Let's explore the question. Lisa required detailed advice on number 1, rollover relief. Now, first you have to do just study the whole rollover relief. Then when it is available, what is the qualifying asset? What is the qualifying condition? So remember that when you are selling an item and you are reinvesting that item, then you will be able to get. So reinvestment is must. And reinvestment in the same asset, right? The qualifying asset. What is a qualifying asset for a corporation? Can anyone tell me? For individual, there are 3 qualifying items: the land and building, the fixed plant and machinery, and third thing is goodwill. And what about corporation? Any idea? What is a qualifying asset? Because in order to apply this rollover relief, qualifying condition and qualifying time period, we have to check. Goodwill is not part, right? Goodwill is not part, right? Goodwill is not part. Goodwill is only for the individual, right? So first issue is rollover relief. Second issue is capital allowance. And third one is group registration for VAT. So again, it's a group-based question. Lisa's business interests, which have not changed for many years, are set out below. Lisa is not a sole trader. Okay. So Lisa is having an interest in Hoop Limited, 80%, and then Hoop Limited is having 100% in Ribbon Limited. And then Lisa has 100% in Bar Limited. Bar Limited is having a 90% shares in P Limited, and then 65 is Ring Limited, and Ring Limited is having 100% shares in Vault Limited. So it's a complex group situation. All 6 companies are UK resident, trading companies with the same year end. All 6 companies. 1, 2, 3, 4, 5, and 6. There are 6 companies, right? So can you identify a 75% group, as well as can you identify a 51% group? Because in the answer, we have to see first of all whether there is a gain group exists or not. If exists, then we can use it as per the transfer of asset, as per the rollover relief. But if not exists, then no benefit is available. So what is the condition for a gain group, first of all? And we have to apply in this group structure, that is what is exactly a 75% gain group, how it is different from the 75% loss relief group. So the first difference is that a chargeable gain group consists of a principal company and having direct subsidiary having 75% shares, and effective in other companies, that is 50% shares at least. Okay. Now, if you can see here that Bar Limited is having 90% shares. So this is 75%. And Hoop Limited is a separate company. And Bar Limited is 65% in Ring Limited. This is not effective. So Vault Limited is not part. So we have a 75% gain group between Bar Limited and P Limited, right? One gain group is that. What is the benefit of a chargeable gain group? The benefit is that you can transfer any asset without a no gain, no loss approach, right? Similarly, the rollover relief can be used with one company is selling the asset in the group and other companies buying the asset, but qualifying asset within the qualifying condition limit. Okay. But rollover is only available if you're using that asset for trade purpose. If you're using it for non-trade purpose, then part of the rollover will not be achieved. And rollover is basically what? The rollover is basically a kind of relief in which you can defer your losses. Okay. You can defer your losses. Now, my first question was calculate the chargeable gain on the sale of building 1. Let's see what is building 1. So a building sold by Bar Limited. Let's focus on Bar Limited. Bar Limited sold building on May 2021 for 8,60,000. This is the sale proceed, 8,60,000. The company purchased the building on 1st June for 3,15,000 plus legal fee of 9,000. This is my purchase cost, which is total 315 plus 9,000. So I guess it's 3,24,000 allowable expense. On 5th June, Bar Limited had carried out work on the building's roof at a cost of 38,000 in order to make the building fit for use. Remember, only capital expenditure are allowed. So is it capital expenditure 38,000 on working on the building? The point is to make the building fit for use. Yes, it's a capital expenditure, right? So it's a capital expenditure. So further 38,000 as well. On 1st July, Bar Limited spent 14,000 repainting the building. Now, is repainting is an allowable expense? That is a capital expenditure? Answer is no. Is not allowed as a capital expenditure. Bar Limited used this building for trading purpose apart from a period from 1st January 17 to 30th of June 2018. So count the period from January to June. It's I guess it's 18 months, right? It's 18 months. So it's 18-month period. It is intended that the chargeable gain will be rolled over to the extent that it's possible. So rollover is restricted against business use. Look, it's very important to carefully read the requirement of the question and then carefully read the question. There are easy marks like this. In this example, it's very easy to calculate the chargeable gain on building 1. Easy 3 marks because there is no effect of rollover relief. So it's not like that 100% paper is difficult. There are very easy marks. So in the exam setting, always find out from each question, from each part question, what is easy marks. But if you have lack of text knowledge, which is one of the biggest reason for failure, then you can't do anything in exam. So first thing is you have to cover your text syllabus. You have to cover your text rules as much as possible. And then by practicing the past paper, by practicing the exam question, and as well as using the platform, that is the good practice on Excel, especially the calculation side, because it takes a lot of time to adjust. The word processing document, a reasonable speed is needed to compensate their time as well. And smart selection of the topic, a smart selection of the question, a smart selection of the part question, which is easy. Always try the easy one first. Don't write unnecessary. Be selective in your answer. Always check the marks availability. If few marks are available, just be specific, right? Just specific text rules. Now, let's calculate chargeable gain, which is very easy. We have to calculate gain, and that is working. We have to do in Excel. So for chargeable gain, first of all, the sale proceed, it was 8,60,000. Then we have the allowable cost. So we have purchase cost. We have purchase cost available, 3,15,000. We have legal fee, that is allowable, 9,000. And we have the expenditure on roof, and that is 38,000. Now remember that in corporation, this is called unindexed gain because we have to cover inflation as well. So it's 4,98,000 unindexed gain. What is my purchase date? The purchase date is 1st June and the disposal date is 31st May. So the gain indexation is freezed up to December 2017. So the rate is 0.074. 0.074. And it is applicable on cost. So my cost is 3,62,000. So this is indexation applicable of entire cost of purchase, and the factor was 0.074. So my indexation allowance is 26,788, and this is now chargeable gain, right? 471,212. So this is a very easy part. Just we have ignored the repaint cost and a simple one. Now let's move on to the next part. In relation to claiming rollover relief, in respect of the disposal of building 1, explain which of the companies in the bar limited and hoop limited groups are and are not able to purchase qualifying replacement asset, and state the period within which such asset must be acquired. So it's a theoretical question. You have to identify that which group is relevant, right? So obviously the 75% gain group, one company is selling. So the selling company is a bar limited, right? So we have a 75% subsidiary with respect to bar limited. Okay. So you can see in bar limited, the bar limited is having 90% shares in P limited. So if bar limited has sold the asset, so P limited, if buy another asset within the qualifying time period, so that would be a benefit that they can get the rollover relief. But this is not possible for hoop limited because the seller is bar limited, right? Another thing, is the date. So what is the date of acquiring the asset? For rollover, remember the date, 1 year before and 3 years after, right? So let me write some theory, rollover relief. In order to claim rollover relief, there must be a 75% gain group. Bar limited is having 75% holding, is at least 75% holding in P limited. So there is a group structure for gain purpose. But bar limited is, what is the group, is having 65% shares in, what is the company, Ring Limited. So both companies, that is Ring Limited and its subsidiary, cannot part of this group. Hoop is having a separate group. I am explaining the group structure, right? So bar limited disposal can be used as a rollover relief against purchase of qualifying asset by P limited in qualifying period. This is the explanation, okay? And the date, what is the date? What is my disposal date? Disposal date is 31st May 2021. Disposal date is 31st May 2021. So the time period will be 1 year before. So 31st May means 1st June 2020. So it's 1st June 2020. Add 4 years in that. So that would be May 31st May 2024. You can get 1 mark for writing this date correctly. So this is a brief explanation of part 2, that is, what is the condition, right? Now third one, explain again with the aid of supporting calculations the additional amount that would need to be spent on qualifying asset in order to maximum amount of the gain on building 1 to be relieved by rollover. Okay, so we have to compare the proceed with the amount reinvest. But remember that we have to consider the asset which is using for trade purpose. And there was written that few months we are not using it for trade purpose. Okay. So it has been written that we have to identify the additional amount. So next part of the question is identify the additional amount on the asset purchase so that we can get what is my proceed for the time being. My proceed is 8,60,000, number one. And the period of purchase is 1st June 2015 and sale is 31st May 2021. So it's, first of all, let's calculate the total period of ownership. Can you count from 1st June 2015 to 31st May 2021? Total period. How many months? So here you can say that 6 months of 2015, then it's 16, 17, 18, 19, 20. So 5 complete years and 6 months, it's 66, and then 31st May, Jan, Feb, March, April, May. So it's difficult to identify the exact month. Let me calculate again. June, July, August, September, October, November, December. It's 7 months. 5 months in 2021 becomes 12. 1 year complete, in 5 year, that is 6 years. So the ownership period is 6 years. 6 year means 72 months. And non-trade period we have been given from 1st Jan 2017 to 30th June, which is 18 months. So non-trade period is 18 months. So it means the sale proceed, which is eligible for rollover, is, you can count the effective trade month is, how many trade months are there? The trade month is 54 out of 72. Okay. So 8,60,000, 54 trade, 72 total. So the sale proceed relevant is 6,45,000. This proceed is relevant for rollover relief. Now, what about the cost? a replacement building. We have this information, building 2 by Bar Limited. Bar Limited purchased building 2 newly constructed on 20th January and unused for 7,20,000 on 1st May. The purchase price includes 200,000 in respect of land, 1,50,000 in respect of electrical, water and heating system. Total cost is 7,20,000. This is the cost. Bar Limited brought the building into use immediately and used 2/3 of the building for trading purpose. So now problem is that the replacement asset is also 2/3 used for building purpose. So my replacement asset cost is relevant 7,20,000 and that is 2/3. How much is the cost? 2/3 is a qualifying expenditure, that is 4,80,000. Now, what was the question? Identify the additional amount that you have to spend in order to maximize the rollover relief. So sale proceed eligible 6,45,000 and cost is only available 4,80,000. So additional amount you need to spend is the difference between 645 and 480. And how much is that? It's 1,65,000. So in order to get the maximum rollover, what do we have to do? We have to expense out, we have to incur further expenditure on a particular item so that it becomes maximum rollover relief. That was my part 3. So 11-mark question on group structure, the gain group considering the rollover relief, a very important topic. Right? Any question on my explanation and my working, my calculation? If you have any confusion, please ask. Sometimes in a group structure situation, a very complex type of group is there. So you need to have a good understanding of all the kind of groups. Like I already told you, understand what is 75% loss relief, which company is a part, what percentage is needed, then work out on gain group, how it is different from loss group, then consortium, and then 51% VAT group, and then 51% for a large company and a small company identification. So you need to work out on the groups. Might have a question in section A on groups. Most likely one. Remember, we can't take risk on losses on groups. Get it? So the next part, part B. Now in the last part, a replacement building was purchased by Bar Limited. So we have some like construction on this building, and the purchase price included 200,000 for land and 150 for electrical, water and heating system, right? 2/3 is used for trade purpose, 1/3 is for rented out. What is the question? Explain the capital allowance that are available in respect of the acquisition of building 2. So as far as capital allowance is concerned, if you can recall the capital allowance, generally the capital allowances are not available on building, right? Capital allowances are available on plant and machinery, and capital allowance are not available on land. But remember, in case of plant and machinery, we have some item which is part of main pool, some items which is part of special pool. What about the electrical and water and heating system? Which kind of capital allowance is available? First of all is a special rate pool item. Okay. It's a special pool item. And if you have AIA of 1 million, what should be the best order for that? What should be the best order for that AIA? You have to use first against the spatial pool or main pool. You have to offset against main pool first. Then, sorry, the spatial pool first. You have to offset against the spatial pool first because the written down allowance is only 6%. Okay. So in order to maximize capital allowances, it's always advisable to use the annual allowance first against the spatial pool item is given in this question, and then on the other assets, right? Now, as far as the new building construction is concerned, we have the cost of building 7,20,000, but it includes a land element. It includes plant and machinery, which is not eligible for structure and building allowance. Okay. Structure and building allowance is basically a type of allowance on which plant and machinery is not available. Okay. So what amount is available for structure and building allowance? We have to just discuss what type of capital allowances are available. Again, a theoretical question. So capital allowances, put a heading of capital allowance. First, discuss about the plant and machinery. So we have a kind of the integral feature. An integral feature in my example, which be a part of a spatial pool item, is water and heating system, right? So we have water and heating system, which cost 1,50,000. Heating system. So annual investment allowance is to be used against it first. The reason for using the spatial rate pool is because on that only 6% WDA is available. So if you offset your annual allowance against the main pool item, then the leftover one is spatial pool, but only 6% WDA is available. That's why it's beneficial to use the spatial pool for offsetting AIA and then use the main pool item for 18% WDA. Okay. So you have to get the 12% excess WDA if you follow the order that I mentioned. Now, this is the first part. You can write a few lines as well. In order to maximize the written down allowance. How much? The difference of 12%. This is the first part. Now, structure and building allowance, SBA. The building qualify for SBA includes how much? 7,20,000 is the cost. Land element is 200,000 minus the plant. So how much is available for structure and building allowance? 3,70,000, right? The rate is 3% per annum on a straight line basis. Okay. So as this asset was brought into use on 1st May 2021, from 1st May 2021, time apportion when needed. Okay. No AIA is available against the building. Building is not eligible for the annual investment allowance. So as the land is not eligible for any kind of the written down allowance. Again, a very easy one, not that difficult. Okay. Now the last part is related with explain which of the companies in the bar limited and hoop limited groups would be able to register as a single group for the purpose of VAT. Discuss the advantages of registering them as a single group and the whether all companies would benefit from joining the. So it's a simple question. You have to deal with the benefits of making the VAT group. Okay. So if you can look in the structure, how much percentage is needed for VAT group? How much percentage is needed? Anyone having the knowledge of VAT group? Is an important topic. In order to formulate a group, you must be a sole trader, a company, right? So here you can see Lisa is not able to formulate a VAT group with any one of the company, right? Bar Limited is having 90%. You can count this company as a VAT group. Similarly, 65, the effective is also. So Bar Limited can use P, R, and V all together. The Hoop Limited can also use Ribbon Limited. So all the companies can form the VAT group because the percentage is more than 50%, right? First of all. Next thing is that why we are interested in formulating a VAT group. What is the advantage of making a VAT group? What is the biggest advantage? Let's see some more information. The trading activities of the Bar and Hoop Limited, the number of transactions between the Bar Limited and the Hoop Limited group is increasing, the intra-group transactions. Watt Limited makes zero rated supplies. All of the other 5 companies makes standard rated supplies. So is it beneficial that a zero rated company selling zero rated supply would be a part of VAT group? Is it beneficial? So should we include Vault Limited or exclude? No. The zero rated supply means the company is not paying any kind of tax. So in that case, it is beneficial to make it a separate company, right? Rather than a group. Because if that company would be part of the group, then you have to follow the group's rules. Okay. So when you are trying to formulate a group, exclude this Vault Limited because it has no output tax. It is only having input tax, so that company can get it on monthly basis, on quarterly basis, other than the other groups companies. And those companies is having the major intra-group transaction. The benefit is that there is no VAT on transaction between group companies. So that would improve your administration burden, facilitate you in terms of administration. That will improve the cash flows of the group. So it is better to formulate a group without a company, that is Vault Limited. Again, the theoretical. So you can see just the past paper. The first one, a 3-mark calculation. Other than that, in third, few marks for calculation, and then everywhere we have theory. 5, 4, 9 marks theory. We have like 13, like majority of the question is based on the theoretical knowledge. So if you have theoretical knowledge, you can produce the text rules, you can produce the text knowledge, you will get the marks for sure. Less chances of error in producing your text knowledge rather than performing the calculation. Okay, any question? Anything which you are not able to understand from these two questions? We have covered these two questions based on group loss relief and gain group with some minor intangible asset calculation or capital allowance or VAT group. So try to revise these before the next session. Next session would be on means a day after, like it would be on Thursday, right? And then it would be on Saturday. So I will like the next agenda of the thing is we'll discuss some overseas corporation issues, double taxation and other things like that, and some foreign control companies like that. And after that, we'll jump to the CGT issues with respect to individuals and with respect to like some overseas stuff and some kind of relief. So next agenda is CGT, relief, and overseas issues.